Hello and welcome to Vision Economics Academy. So today we'll be covering the topic money creation or credit creation. Today we'll be dealing with the process of credit creation by commercial bank. The function of commercial bank, the main function of commercial bank is to accept the deposit and give out the loan, right? So this is a hypothetical process, a very simple process through which we'll be showing as to how credit is created by the commercial bank. It's a very important topic for class 12, right? Now, before we start the topic directly, we will be looking at what LRR is. It's not RRR, it's LRR. Okay? It's legal reserve ratio. Now every bank has to legally or compulsorily, it's like they have to keep a certain amount, a fraction of the reserve deposits as the reserves. Okay, it's mandatory for the commercial banks to keep a certain amount, certain fraction of their deposits as reserves for prudential norms, of course, right? Now, why only fractions of the total deposit is kept as reserves is because through the experience that all depositors do not approach the bank to withdraw the money at the same time, right? At the same time, all the depositors will not come to bank to withdraw the money, and there is a constant flow of deposits into the bank as well simultaneously, right? So that's the reason why only fractions of the total deposit is kept as reserves, right? Now, basically, before understanding this, we have to take two assumptions. Whenever I am meaning bank, I mean all commercial banks system, okay? And all the transactions here would be routed through the bank only, okay? All the payment, receipts, everything is routed through bank. Now, there is a table over here, okay? At this column, we have deposits, then loans, then there is cash reserve ratio. For our example, we are taking cash reserve ratio or the legal reserve ratio as 20%. Now we will come across the term called money multiplier, right? So what is money multiplier? It's the number of times that the initial deposits is multiplied, right? So let's say LRR is 20. So money multiplier is derived by the simple formula, that is 1 by LRR. Okay, then 1 by LRR is 20, so 0.2, that will give us 5. Alright, so with LRR being 20, our initial deposits can multiply 5 times. Okay, now let us see the process. Suppose initially 1000 crores is deposited. Okay, now with 20% as reserves kept, that would be 200 crores. The bank will be able to give loans worth 800 crores. Now, as we know from the assumptions that all the transactions are routed through the banks, so whosoever takes the loan of 800 crores has paid back the credit, right? Now the person who has received the money will again come and deposit in the bank, right? So again, this round 1 of deposit would be 800. As we know, all the transactions are routed through bank. Now with 800 as deposit, now keeping 20% as reserves, bank will be able to give 640 as loan, as 20% of 800 is 160, right? Now round 2, Again, the loan is given out, the person concerned has taken the loan. Again, with that money, the person pays back to the person who he is indebted to. The person receives the money, comes back to bank again with a deposit of 640 crores. And likewise again 20% of 640 is 128, which gives us 512 crore as loan. So likewise the process continues. It continues. It continues until and unless, okay? It continues until and unless your cash reserve ratio does not become equal to 1000, the initial deposit. Okay, so this process continues until and unless cash reserve ratio becomes equal to 1000, that is initial deposit. Okay, right? So the total, as we know, the money multiplier is 5 times, so initial deposit being 1000, the total deposit will be 5000. Loans will be 4000 and total cash reserve will be 1000. Alright, so now banks are able to create total deposit of 5000 with initial deposits of 1000, right? So simply money multiplier is 5 over here, so the total deposit becomes 5 times the initial deposit. Alright, so now with this we conclude the credit creation or money creation process by the commercial bank, and we have just got introduced to this concept called money multiplier, right? So this is the process of credit creation. Now we'll meet in the next class where we'll continue with the banking chapter. Thank you.